Yo, what is going on, investors? Welcome back to the channel. I've been on a little bit of a hiatus the past few weeks. I got some much needed vacation time back on the East Coast with my family. I'm back in LA now, and in today's episode, I want to talk about an article the Motley Fool just did on SoFi stock, right? I was going through Yahoo last night, just kind of catching up on what's been going on with the market the past couple weeks, and this article came up. Is SoFi stock a once-in-a-generation investment opportunity? Why it's below $10? As you know, if you follow my content, I'm a big SoFi bull. I have right around 4,000 shares right now of SoFi stock, so I am an investor in SoFi. I want to break down what this article discusses, whether or not they think it's a good opportunity or a bad opportunity. SoFi stock really hasn't done much in the 2.5 weeks that I've been gone. It's still trading under $7. Earnings is coming up in the next few weeks, so will we see a possible run up into earnings? I don't know. The sentiment for SoFi stock is probably the lowest it's been in quite some time. So let's break down this article, see what it says, and see if SoFi is a generational type investment as we move forward. All right, let's get into it. All right, SoFi investors, here is the article right here on Yahoo Finance done by Neil Patel from the Motley Fool. Is SoFi stock a once-in-a-generation investment opportunity while it's below $10? I think the opportunity under $7 is great in my opinion. I'm really interested to see how earnings go and see kind of where the business is moving forward in these high interest rate environment. Let me know in the comments below. Are you buying SoFi right now? Are you selling SoFi right now? It's a tough time to be a SoFi investor, especially because there's tons of other investments that are making tons of money. If you just invested your money in, say, VOO, which covers the S&P 500, you'd be up like 20% in the last year. And SoFi is down like almost 30%, which is crazy. The opportunity cost for investing in SoFi is really getting hard to stomach for a lot of investors, right? Because if you put your money somewhere else, you're going to make considerably more money than you would losing a shit ton of money while you're investing in SoFi right now. But that doesn't mean that SoFi can't double, triple, quadruple from where it's at right now in the next few years. That's why I'm still invested in SoFi. So let's take a look at this article, right? The financial service sector is one of the largest and oldest industries out there, but in the past decade or so, there has been tremendous innovation. That's because the internet and tech advancements have created new avenues for businesses to serve customers. That's one reason I really like SoFi, right? Commercial real estate is in a really crazy spot right now. All these banks like Bank of America and Chase have all these brick and mortar locations and are paying tons and tons of money on rent. SoFi and their business model, they're like, we're not going to have actual banks that you could physically go to. We're going to be a completely online service where you do everything on the internet, right? And they don't have that huge overhead that comes along with having physical locations where you have to go into to be served for your customers. Bank of America and other banks obviously do online as well, but they're losing a ton of money with these brick and mortar locations, right? The article continues, however, the fintech stock SoFi has largely been a disappointment for investors. The shares currently trade about 75% off their peak in February of 2021. But is SoFi now a once-in-a-generation investment opportunity while it trades under $10? That is the question they're asking in this article. First, they're going to talk about growth. The big money center banks like JP Morgan and Bank of America have physical branches across the country, which have long been their primary method to attract retail customers. But amid the rise of smartphones and the internet, SoFi business model is fully digital. That's exactly what I just talked about. The online-only bank leans on technology to cater to its user base. This is the first time I'm actually reading this article. I haven't looked at it at all whatsoever. We're going to go over this article for the first time with you guys. Consequently, SoFi is automatically able to target a nationwide pool of potential customers because it isn't confined to a specific geography like kind of regional banks, right? Moreover, its main focus has always been to provide a superior user experience. I use the SoFi app. I'm also a SoFi credit card member, and the user interface is pretty good. We could use some improvement, I would say, if they could kind of take like what Robinhood's doing and marry it with SoFi is already doing and make like a Robinhood SoFi baby app. I think that's the best way to move forward. The article goes on saying this strategy has resulted in fantastic growth. Revenue went from $78 million in the first quarter of 2020 to $645 million in the first quarter of 2024, guys. That's almost a 10x in revenue in just under 4 years. The customer base has also expanded at a rapid clip and now sits at 8.1 million customers. And by the end of 2024, we're going to cross over 10 million members. It's pretty cool, guys. The growth looks great. The market loves a good growth story, but what stood out to me was how SoFi benefited after the regional banking crisis in early 2023. As of March 31st, the business had $21.6 billion in deposits, which was up threefold from $7.3 billion at the end of 2022. So those deposits are continuing to grow and grow and grow. And that's great for a bank because the more money that's in the bank, the more loans and more risk they can take when they give out loans. It sums up the growth story with investors should be encouraged by the company's long-term growth prospects. JP Morgan is the largest bank in the United States with $1.1 trillion in deposits in the consumer and community banking segment. That figure demonstrates how enormous this industry is. It won't be easy taking market share from these guys, but this means SoFi is staring at a big opportunity to keep expanding its customers and deposit base, particularly to younger consumers under 30 years of age, in my opinion. It's going to be hard to get these 50-year-olds and 60-year-olds to get away from JP Morgan and Bank of America and go with SoFi. But as new college graduates go to get these jobs where they're starting to make money, take out loans, this is who SoFi is targeting right now. All right, let's move on to profits. The article goes on, it's understandable if you automatically assume that a fast-growing fintech enterprise is unprofitable. But luckily for us as SoFi investors, and if you follow this channel, you know that SoFi is a profitable company, right? To be clear, this was the right way to describe SoFi throughout its history. Management adopted the correct strategy of focusing on expansion. But things are starting to change for the better. SoFi posted diluted earnings per share, EPS, of 2 cents in each of the past 2 quarters. And the bullish perspective is to believe that this will be the norm from now on. We'll see how earnings go in a couple weeks, but if we can continue to be EPS positive, I think more and more institutional investors will continue to add to their positions, right? The article continues, it appears as though the company is finally starting to leverage its fixed costs, whether that's sales and marketing or other corporate overhead. Executives believe SoFi will produce EPS of 68 cents. That's the midpoint of their projections in 2026. And in the years after, this metric is forecasted to rise between 20% and 25% annually. That sounds like pretty good growth. And if profits continue to pour in, I think the stock price will start and continue to rise year after year. The last thing this article touches on is valuation. Despite the NASDAQ Composite Index trading near its all-time high, SoFi hasn't benefited from this bullish sentiment, which really sucks for us SoFi holders. But I am holding strong. I'm not necessarily adding any more shares to my position because I think there's a lot of great opportunities. I love Berkshire Hathaway right now. Berkshire Hathaway is trading at like a 12 PE, and it's one of the best businesses in the entire country, and I'm adding shares. I know they're like $400 a share, but if you're on Robinhood or SoFi, you can buy $5, $10, $20 here and there and just continue to build your position. That's what I'm doing. I'm adding in my Robinhood accounts the little pieces, and in my Big Dog account, I'm trying to buy 1 share of Berkshire Hathaway every single week. Unfortunately, the SoFi shares have tumbled about 35% in 2024. Ugh. Yeah, that really sucks, guys, considering VOO is up like 20% this year. It is really, really hard to stomach sometimes when you're in these growth stories because you never know when they're going to take off. Tesla traded flat for years and then went parabolic, right? So we got to be patient, continue to do our due diligence, and if these numbers stay where they're at, it's going to be a good investment. We just have to be patient. The current price to sales ratio of 2.8 represents a discount to the historical average multiples of 4.1. The valuation looks more compelling when you look at a few years out. While also considering the price to earnings ratio, it's a little young of a company to look at PE ratios right now. In my opinion, I would stay away from looking at PE ratios for SoFi for at least 2 to 3 years from right now. SoFi's current price of about $6.50 is less than 10 times management 2026 EPS outlook of 68 cents. And if the bottom line continues its upward trajectory throughout the rest of this decade, investors are positioned well to achieve strong returns. And I 100% agree with that. But we have to stay in line with projections and the current trajectory of where SoFi is headed right now. Things can change. That's why we got to stay up on SoFi stock, tune into the earnings, and see where this business is going moving forward. The author of this article sums up his thoughts with saying, of course, the intensely competitive nature of banking coupled with the company's exposure to economic cycles present key risk, right? So we got to check out their loan portfolio and see where the other business segments of SoFi are growing. What's Technisys doing? What is Galileo doing? What is the mortgage company doing? What is the credit card company doing? It's not just a loan-based kind of bank, student loan bank anymore, right? It's this big, broad basket of different businesses. So we got to focus on each and every one of them, see what's growing, see what's lacking, and we can kind of project where this company could be 2, 3, 4, 5 years down the road. All right, guys, I hope you like this kind of content. If you do, please hit that like button and consider subscribing to this channel. We just crossed over 1,100 subscribers. I appreciate all you guys tuning in. I'm back on the saddle, guys. I'm going to be bringing you tons of stock and investing content in the coming weeks. I'm coming out with a new video, 3 stocks to buy now this week. So make sure you subscribe to the channel so you can get all my updates. Thank you so much for tuning in, and we'll catch you on the next video. Peace.